Good morning, everybody. It's Friday, December 8th. Grain markets are mixed this morning. Mackenzie and Brian Split are here, guys. Let's start off with this story from one of the banks out of Europe.
So, according to Rabobank, farmers may soon be forced to pay higher interest rates. The bank is planning to force farmers and rural businesses to pay higher interest rates if they are unable to achieve a certain level of greenhouse gas emissions. The bank already offers sustainability linked loans that require clients to agree to certain emissions targets. Clients who are able to reach acceptable emissions levels, they receive a discount. Rabobank believes that with the right tools, most farmers will be able to limit emissions without major changes or exiting the industry.
Rabobank is a Dutch bank. They're in the Netherlands, but they do have a substantial footprint in the United States. I guarantee there are some people who are watching or listening to this morning who borrow money from Rabobank. So there's two ways that they're doing this right now. One is they have these sustainability linked loans. And I'm assuming most of this is in Europe, but if you meet your target, you actually get a discount. But what they want to do is move to a situation where if you don't hit the target, your rate will actually go up. In the Netherlands, where they're located, the government is seeking to cut in half nitrogen emissions and has offered to buy out some farmers. Rabobank estimates that could mean 30% fewer cows in 15 years. Mackenzie, you're a rancher. What are your thoughts on this?
This is a good way for me not to do business with Rabobank. It's crazy.
But they're probably not the only bank that's going to do this.
Right. However, I mean, as ranchers and farmers, we already have incredibly high input costs. We can't afford to pay any extra for interest rates. So, as a rancher myself, I mean, I would do a lot of shopping around before I'd turn to these guys. I don't see this as a sustainable structure, in my opinion.
Well, they do. Brian, what do these people want us to eat if they want to cut the livestock?
Not beef. You're going to eat bugs. You're going to own nothing and be happy. Yeah, I think the big part of this for Rabobank, it's Dutch, right? And there's a initiative in the Netherlands right now, and so this is part of the bigger ESG scores. And this is coming down the pipeline, not just for farmers, but for everybody.
Oh yeah, social credit
scores. There's already credit cards where it will essentially analyze your purchases and give you like a carbon score. And this is all coming into the future, where the belief is that once you hit you had your beef for the month, or you drove your miles for the month, you want to put more gas in your car. Sorry, you got to wait till next month. And so this is all coming down the pipeline for everybody, not just farmers.
There's going to be a lot of pushback, though. Like,
yes,
most people are not on board with social credit scores, and farmers, I think, are not going to be on board with this. And a lot of this, like, the devil will be in the details. How exactly are they going to track this emissions thing? But it's a slippery slope, because once they start, they're going to be able to, keep pushing and keep pushing and keep pushing.
You're going to give them an inch and they're going to take a mile.
Yeah, it's pretty scary, guys. If you have thoughts on this, and I'm sure that you do, drop them in the YouTube comments. All right, let's get to some grain market stuff.
The Brazilian government reduced its corn and soybean projections on Thursday. CONAB, Brazil's version of the USDA, cut its Brazilian soybean estimate to 160.2 million tons due to unfavorable planting conditions. The estimate is down from the agency's previous projection of 162.4 million tons, but up 4% compared to last season's crop. CONAB also reduced its estimate for this season's corn crop to 118.5 million tons. The estimate is down from the previous projection of 119.1 million tons and down 10% compared to last season's crop.
Brian, what is the market trading as it relates to Brazilian soybean production? Are they trading 160? Are they trading something south of that, north of that?
It kind of felt like when we were up near the upper 13s, close to 14, that we were trading something below 160. The forecast has been weird. It's kind of reminiscent of this past summer here domestically, where there's always that rain in the forecast, but it's in the extended model. And then as the models kind of roll forward, do we actually get it? How are the totals? And eventually we got some solid rain, and it really broke the market. But I think this forecast of rain in the 10 to 15 day that continues to be out there has really put some pressure on the market. But man, I tell you, if this stuff doesn't show up, especially that Mato Grosso area, it's going to get pretty serious. So I tend to think, me personally, as we're getting close to those October lows, that we're going to start seeing value again. And if these rains miss, we're going to go right back up again. But what's the number the market's trading? I don't know. I think it's maybe just a touch under 160.
That's what I think too. Here's the forecast, and this is Brian kind of hit the nail on the head here. So the next 10 days, yeah, they're going to be rain, but it's going to be way below what they would normally see this time of year. The extended stuff out through like the third week of the month introduces some additional rain, but they're still running well below normal. So like, could this be a 2023 US situation where they catch just enough to like end up with some decent crops, or is Brazil totally different and that's not the case? I don't know, but I would agree that the market's trading something like a 158-ish if I had to guess. That brings us to today's report.
So USDA will release its monthly crop production and WASDE reports here this morning at 11 Central Time. The trade expects few changes to the U.S. balance sheets. The USDA will likely wait until January to make any adjustments to their 2023 U.S. crop projections. Traders do expect some activity in regard to South America. Smaller production estimates are expected for the Brazilian, corn, and soybean crops.
USDA doesn't normally make any adjustments in December. So do they do it today because Brazil's in such bad shape?
It's a great question. We're not going to get anything as far as our domestic production side of things. So I think the trade is really just focused on world numbers. It wouldn't surprise me if they didn't change it and just waited till January. I think that historically is typically what they do, but that'll be a big part of today's report is, did they feel that what's going on in Brazil is severe enough to make the adjustment right now? What we have seen in previous years, and maybe last year, the drought in Argentina would be a great example, is the USDA was definitely a lot slower than the South American, like Safra Mercado, for example, than the South American agencies that were dropping the production. So we'll probably see the USDA really slow roll compared to CONAB.
So if USDA comes out today and they leave it unchanged at 163, I wouldn't read much into that. That's just normal USDA methodology. And if they cut it, I mean, they cut it. If it's below 160, that's bullish, would be my thought.
Yes, I would agree with that.
US, we're not looking for anything. They don't change yields in December, or they typically don't. I suppose you could see some small changes, but we're not looking for anything there. And the global balance sheets, any adjustment there will be largely a function of what happens in Brazil and Argentina in those estimates.
Wheat futures surged higher on Thursday after a Russian attack on Danube River port facilities damaged a grain elevator and killed a truck driver. The attack caused March wheat futures to gain 1.6%. Earlier this week, prices were supported by 3 flash sales of U.S. SRW wheat to China, totaling 1.01 million tons, the most in a decade. China is known to be the world's largest wheat producer, but has been forced to increase imports this year due to rains damaging their crop.
I don't know if the market rallied on the attack. I think it was probably more the Chinese purchases. What say you, Brian?
I think the Chinese purchases are more important. We've also got a history here recently of the market really ignoring Black Sea updates, as long as it's not anything that is super substantial. We've seen attacks on ports where it'll bounce 5 to 10 cents and then they just pound it immediately. But that was when the market was trending lower. So I think the Chinese buying is definitely put a floor under the market here in the short term. You just got to be cautious because we saw China come in and buy a lot of soybeans in a very short period of time. We had a week where they bought over 3 million tons. And yet here we were just a couple days ago, $1 off the highs.
Yeah. This chart looks substantially better. I mean, you look at this SRW chart, you're trading above those October highs, above, I believe, anything you saw in September. Does this look friendly-ish to you, friendlier?
It looks like we've built a base and we may potentially put in a good short-term low. I think when you look at the HRW chart, you'd see a similar bottoming formation. So this looks very constructive. SRW is the type of wheat that China's buying, so that's why it's really led and gone up the most versus the other two classes.
Here's a chart for you. So this China has the most U.S. wheat on the books that they've had since 2020 seasonally, and we just kind of ticked up here following these recent purchases. So if you were to kind of get toward a 2020 type pattern, I think USDA, given these purchases, they're already too light on wheat exports. They're going to have to raise that number. And if China comes in for more, which is a question mark, of course, this could be a game changer, because the reason largely that U.S. wheat in particular has been unable to rally is because of the lack of an export program. But here we are now. Total commitments are still like the worst in 10 years, but USDA has a low ball number in there that probably needs to come up a little bit. So I don't know. It looks better. China to the rescue for the wheat market, I guess.
Abundant rainfall has improved Argentine soybean conditions. According to the Buenos Aires Grain Exchange, Argentina's crop conditions have improved due to an abundance of rainfall in recent weeks. 98% of Argentina's soybean crop is considered to be in normal to excellent condition. Argentine farmers have planted 52% of this season's 42.7 million soybean acres. The Rosario Grain Exchange is forecasting this season's soybean crop to reach 50 million tons. Argentine farmers have also planted 40% of the expected 42.7 million corn acres.
We haven't talked a ton about Argentina because, one, they're much smaller than Brazil in terms of production, and two, they're in like really good shape. It appears like they're recovering.
Yeah, we mentioned earlier they had a drought last growing season. That was a major issue. They crushed those soybeans and they turn it into meal. They export the meal. That's 40% of the world's exports comes from Argentina for meal. So when there's a problem there, it is still a story, even though it's a smaller country than Brazil and their production smaller. But I think it's important to realize the context of what Brazil plus Argentina is going to look like this year versus last year. We had additional acres in Brazil. Plus, it looks like Argentina is off to a good start. We're going to see their production recover tremendously from last year. They lost about half of their crop last year.
Yeah.
So when you talk about Argentina going back up, 20 plus million tons versus their last year crop, plus Brazil adding some acreage, even if we do take a hit to some production in Brazil, the net year over year out of South America is still going to be up a substantial amount.
Yeah, we had a chart yesterday of Brazil plus Argentina soybean production, and the estimate I think right now from USDA is like 211 million combined. Prior record was like 185, somewhere in that ballpark. It's going to be really tough to not have a combined record between the two countries. Let's get to export sales.
U.S. corn export sales declined last week. Net corn sales of 1.3 million metric tons were down 33% from the previous week and 17% from the prior 4-week average. Japan was the largest corn buyer for the week. Net soybean sales of 1.5 million metric tons were down 20% from the previous week and 21% from the prior 4-week average. China was the largest soybean buyer. And net wheat sales of 356,400 metric tons were down 43% from the previous week, but up 8% from the prior 4-week average. Taiwan was the largest wheat buyer for the week.
So everything was off, but export sales in general have seen a nice uptick. We've seen some improvement, largely as a result of lower prices, basically. I mean, low prices cure low prices eventually. Brian, what are you hearing on the logistics side? That seems to be the big story right now is the Panama Canal thing. We've still got river issues. PNW is good, but it has limited capacity. I mean, this Panama Canal thing could still come back to bite us.
Yeah, it still is a potential issue. I mean, that needs to solve itself. We need some rainfall down there to really make that more feasible, because there's some entities out there that are paying some big boku bucks to jump their ship to the front of the line.
Right.
And so if that's going to happen, it's going to make that a congested waterway where it's going to be difficult to get product through there. Now, going back to that last slide, there's a couple things I like about it. Even though the corn exports were down from the previous week, I like that Japan was the biggest buyer because it's been Mexico. Yep. I know everybody wants to see China come in and buy corn, but Japan has been a very steadfast customer of U.S. corn, big buyer of corn over the years, and they were absent for a long time. And we wanted to see that Asian buyer come in, and so here we are with Japan being the biggest buyer of the week. I like that. Even though exports were down, they were still over 1 million tons. I think we could string together weeks of 1 million ton plus. That's still positive to me. And so I was happy to see Japan on that sheet.
And we're approaching like primetime U.S. corn shipping season, which is after the first of the year. And ideally, we'll be able to ship everything that we've sold, and maybe some of these logistics issues will resolve themselves. You did have a flash sale yesterday.
We did. U.S. exporters sold 121,000 metric tons of soybeans to unknown destinations for delivery during the current marketing year. The U.S. soybean export book is running 16% below the same period last year.
Cool. We can use some more of that. What did cattle do yesterday?
Of course, they had another down day. Feeder cattle futures closed an average of $1.75 lower, except for 12 cents higher in spot January. Live cattle futures closed an average of 93 cents lower. We have had some cash cattle trade this week, and it has been anywhere from $3 to $5 lower. Pretty disappointing. Box beef has also been down this week, and yesterday, choice ended the day at $289.84. That was down 72 cents. Select ended the day at $258.83. That was down $1.07.
Brian, there are a lot of what I would call knife catchers out there when it comes to the cattle market, trying to catch the falling knife. Is that advisable from a trading standpoint?
You know, it really depends on how you do it. I'm probably not a knife catcher with futures unless you have some very deep pockets. I think you can come in and use some options where you know immediately when you put a position on what your risk is, and if you're okay with that, then you're okay with that. If you're okay lighting that money on fire, then have at it. I think we put together a pretty good video on Wednesday for the premium subscribers that showcased where I think this feeder cattle market could come in at some major support based on the break that we had in 2014. A lot of things are lining up similarly with some of the major monthly moving averages and the scope of the break that we saw from the highs. So I do think we're getting very close to where we're going to see this market bottom out for a little bit and go back and get a good retracement of this break. But yeah, you got to be careful on how you go about it.
Brian did the plug for me today. Sign up for the premium deal, and I'll send you over that video on feeder cattle. Guys, outside markets here on Friday. U.S. dollar's quiet. Stocks are quiet. Bonds are off a little bit. Crude oil's up $1.24 in the January WTI at 70.58. Everybody have a wonderful weekend. I'll talk to you guys next week.